Good morning, ladies, and good afternoon, rather. It's been a long day for me. So I'm in a position where I can't even separate between a morning and an afternoon. Good afternoon, ladies and gentlemen. Welcome to this last mile of cycle CPDs that we've been dealing with throughout. I'm hopeful that you have hanged on and you have benefited quite a lot in terms of what we have been doing from since we've started up until now. Well, I just want to make a quick recap in terms of what we should be looking at. Today we'll be looking at the last two chapters, that is chapter 9, directors and management of the company, and the conclusion that is going to sum up almost all the chapters that we have dealt with from chapter 1 up until here. But perhaps let us look first from what we've done in chapter 7, that is the competitors of the company, just to recap. And we said if you are in business and you know that you've got competition, it is important that you should take action, and the action that will turn your customers into your believers, people that are going to believe what you are selling and what you stand for. All right. Take care of things like referral letters, referral power, the retention value, and the trust factor amongst your customers. We asked the question how your business views competition, what is your role, because remember there are many competitors that compete with you. So what is your role within the competition quadrant? Okay, how do you see yourself in that quadrant? Do you see yourself overwhelmed? Do you see yourself overwhelmed with fear? Do you see yourself as a major product value contributor in that quadrant? How big are you and what are you making? How is what you are making different to others? Okay, what can possibly happen if you are left alone in that quadrant? So those are the questions that you should be asking yourself. Okay, does competition mean anything to you at all, or you are just carrying on as business as usual? You are not worried about anything. Future just seems bright for you. Okay, and hence we're asking the question, whatever, however you are worried, what could that be? What is it that competition mean to you? Does it mean you have reached a stage of comfort, or you have reached a stage of an improvement level, or you have reached a stage of doubt? You are now overwhelmed with doubt. You're not sure what to do. Other competitors seem so overwhelming to you. What is your position? So those are the questions that you should be asking yourself. Do you fully understand what you say, because what you sell? Because competition may give you an indication that what you sell is actually not the right thing. In fact, it may also warrant an urgent improvement on your side to say, please change this and this in order for you to fit in this competition quadrant. What are the changes that you have made in your product because of competition? Where are you keeping the feedback that you are getting from your customers in terms of how you should cope with the competition? All right. Do you write these things down? And do they influence your areas of improvement, or it's just a business as usual to you? Do you know your competitors? That is, do you have a complete list of your competitors? Who is competing with you? And what are your strong points over them? And what are their strong points over them, over yourself? And what are you doing about that? Or you feel like, these are people who will come and go. There is a business that I directed called Corner Energy, where we're selling energy drinks, almost everything that had energy. We're selling woods, we're selling matches, we're selling boosters and all those things. So we started by opening a tuck shop on the side of the road. So we're targeting motorists there. And shortly after we've opened, of course, we had our price list. So shortly after we've opened, there was another mobile tech shop that opened across the road. Then my staff members told me that, look, we are facing competition. There's a guy who's doing the same thing across the street. What should we do? First, I said, let us talk to the person nicely to say we understand that the person has got a right to sell anywhere, but this space has been taken now. So can he go and sell somewhere else? Then he refused. I thought we were making a genuine request to say no, because remember it takes time to look for the density of population, so we found it. Now we found it. He saw how we are doing. He came up and installed his mobile um, tax shop. So what we did, I said to my guys, okay, if he does not agree to our request to move to somewhere else, I will need to go and talk to him in person. That is business to business. And the person disagreed and told me the rights that are in South Africa, in the constitution. I said, no, that's fine. Okay. So we gathered how much he was selling each of the items. Was his tax shop was a replica of what we're doing. So we gathered the information. We saw how much he's selling each item we're selling. Then I asked my guys to drop everything by 50%. Everything that we sell, we must sell it at half price. Okay. Now that was aggressive because we just wanted to make sure that the guy leaves that place and so forth. So we asked the shareholder to give us more money to deal with this competition. The shareholder agreed, and we dealt with it. All right. So competition and knowing your competitors is very important. Does your product or service allow you to obtain customer feedback? Okay, then and if not, what instrument do you use to get customer feedback? There are a lot of products, and products are different in their nature. FMG goods, fast moving goods, normally don't have a way to track customer feedback, but tailored and batch production system will normally allow customers to give feedback at a particular point. So it is very important to know that you still have a responsibility at a post-sales level to say how do you deal with your customers at a post-sales level, and what type of strategies do you have to improve. The way I see it is that you don't depend to your competition to get feedback. The first people who may want to give you feedback are your customers in terms of what you sell and how you sell it to them. Do you have post-sale marketing strategies or customer initiatives who's already dealt with that? Do your competitors give you a hard time? What is it all about? What stress are the competitors giving you? Are you bothered by the stress itself, or are you doing something with it? Or are you bothered by the fact that you are not doing anything about it? Okay, so those are the things that you need to look at. Or you can ask the question inversely and say, what pressure do I want to give it to my customers, and why, and what type of resources I'm going to allocate to that pressure? What is the time period for that pressure? And what results do I want from that pressure? Okay. So, do you issue financial statements to your customers, to your competitors? If so, why? Or perhaps, do your competitors get your financial statements? Do they have access to your financial statements? Whether your financial statements are made public or they are given to them. Okay. And the competition and the question says, if so, why? Do you give them? Or so why you don't give the, are you scared of something? Do you have fear that they might pick up some form of irregularity? Or do you believe that by giving them your financial statements, you are exposing yourself to a no zone situation? All right, so that question is very important there. Do you have access to your competitors' financial statements? If so, what do you use them for? Okay, are you using them for the same reasons they are using yours? Or you've got a different strategy altogether when you get their financial statements? Because remember, you don't have to use their financial statements the same way they are using your financial statements. All right, so you might be strategic in terms of how you want to use their financial statements. You may want to list the gains that you want to get from their financial statements so that you are at par as compared to them. We talked about two types of competition. We talked about direct competition and we talked about indirect competition, and we went into depth in terms of what those are. We also looked at the three levels of competition. We talked about the aggressive competition, we talk about the fair share, and we talk about gap filling. I've in this session I've talked a little bit about aggressive competition, what I've mentioned about the guy who was selling across the street, selling the same products that we were selling. Okay. What are the things you have learned from your customers, and how will those help you to improve your business operation? So from now we've been talking about this, and we've been trying to make an illustration that running a business is not all about you doing what you know, but it's also about internal and external factors, and competition is one of the external factors that you need to deal with, and customers are one of the internal situations that you need to deal with if you want your business to progress a little bit further. Do you have a schedule or journal that helps you respond to your competition threats? Do you write your lifetime situations down? Do you write your business challenges down? More so the challenges that are coming from the competition. And I'm trying to find strategies to deal with these. And if so, what type of strategies are you busy dealing with? Are those strategies within the norm? Are they legal strategies? And what are you trying to find out? I think whatever the case is, the starting point is to operate a journal that helps you to respond to your competition threats and learn to deal with competition from that angle. What do you think your customers prefer your Why do you think your customers prefer your competitors over you? Okay, so there might be instances where customers start to leave you because of number of other issues. Some of these are fair, some of these are unfair. Take for instance Kunoka. Kunoka, there we train accountants who will, after they've trained with us, will go and open their firms at some future date. So the norm there is that they normally take 75% of our clients with them. Okay, do we regard these guys as our competition? Yes, we do, but we don't have to do anything about them because that's what we want. Because ours is to make sure that people get into a situation where they go to school, they study, they get trained, and they make a living from there. So you don't have to, if you are in that line of business, you don't have to apply aggressive strategies to win your customers over those students. But you might decide that your biggest salary or your biggest achievement is to see them doing something about what they've learned from you. And most of the customers enjoy that because they've worked with the kids and they understand the kids better. They found the kids. One of the questions from the survey from my customers was saying, we found kids more approachable than you. Sometimes we're scared to talk to you because you are very strict and all those things. So they prefer to work with these kids. Do you have personnel looking at the business competition and related issues? Yeah, this is an extension according to your organogram. It may not easy to have to employ someone who's looking specifically at competition first. There might be no resources to deal with that. You might not be available to get feedback from the person. You might not be available to create that department that is going to look at customers. It's normally sales. That is the sales department that is looking at that. Sales and marketing is the business that is looking at the competition. So you might want to create a organogram, and you find that you don't have time to create that organogram and to implement it. Okay, so it might create some problems, but it is important to make it a point to you that there is that situation where you need, as you grow, those are the avenues that you need to look at and make sure that you consider that you have someone looking specifically at that angle. All right, so that's what we're trying to talk about that. Have you made any adjustment to the services or products you sell recently? And if so, why? So where is that adjustment coming from? Is the proposal coming from your customers, or is the proposal coming from your customers? And why do you see a need to make that adjustment? Is it because you are losing customers, or you are finding more competition with uh, selling product with more features than yours, and so forth? So those are the factors that might be coming in there. How far apart is your product or services from your competitors? What is it that they do, and of which you cannot? So what features are they including in their products? Maybe because of resources, you cannot include those features in your product. So what are those things, and how are they impacting your product and your business? All right. People can really put nice stuff in the. I remember there were two ladies just down the road. They were selling muffins. So the first one sold a nice muffin, very fluffy, very fresh, and we will sell it for 550. Until there was another lady who was selling the same muffin, but there was a chocolate inside the muffin, and he was selling it 450. So you could tell where this is going. So there are features in the product, and how are those features affecting your existing product? Where do you sell your service product? That is what must be done to access your product. Is it an online product, or is it a product that people must go to find it, and so forth? It is very important because it might make you understand the level of competition. Because if you are selling online, you are not competing locally, or provincially or nationally. You are also competing cross border as well. So if you're selling a physical product, at least your competition is local. So you must understand those issues when you start getting into sales. Okay. Does your business have any form of competition strategy? We talked about strategy when we started our series, and we mentioned what a strategy is when we talked to competition, what informs a strategy, how a strategy is financed, for how long a strategy must be. And we also talk about CAR, that we talk about it in cycle 1.4, to say how you can use CAR to form up your competition strategy. But as we talk about this part, you would see that, yeah, this game really needs someone who's going to look at it, someone who's going to be upfront about how we approach the competition strategy. So it's a question of resources, question of time, question of reliability, question of strength, and question of availability. can you be available when that department needs you? So it's that thing in a nutshell. What are the competitors' financial indicators? What are they looking to find from your financial statements and normal circumstances? They are looking to find out about gross profit margins. They are looking to find out about operating expenses. They are looking to find out about debt levels and the cash flow balances on the cash flow statement. What is the competitive intelligence toolkit? The price advantage, the location strategy, the social proof, and the product launches. Okay, do you understand why the business needs to have a strategy? We talked about a strategy. We talked about how the strategy is formulated. I'm sure by now you will see that the strategy will address quite a number of issues. It might address issues about customers. It may address issues about competition. It may address issues about suppliers. It may address issues about uh, the price and so forth. So the users of financial statements that we have dealt with may require that there is a strategy to deal with each of those users so that when you report on the financial statements, you understand exactly what needs to be done. Can you use CAR to develop your business strategy? We talked about CAR and we talked about how that can be used to develop a strategy. Do you know that strategy is for a period of time? So it's normally 3 to 5 years. If you are using CAR to develop your strategy, it may be for 3 years. But if you are using a normal strategy time period, it may be 5 years. Do you know that a strategy is for a time period? Yes, we know that. Do you understand that for the strategy to be workable, it needs a budget? Yes. And we talked about 3 types of budget. We said there is an operational budget that is going to look at the day-to-day running of the business, and there's going to be a personal budget that is looking at the expenses, that is looking at the expenses relating to employees, okay, salaries, COIT, employers contribution, SDL, occupational safety, and so forth. So those are the instances where you will be thinking about the personal budget, and there's going to be a capital budget to say, okay, if if there's a capital budget and if I employ a personnel, the personnel will want a fridge in the kitchen, a kettle to make coffee, glasses to drink coffee and drinks, spoon, cutlery, the washing, the dishwasher, the computer, the desk, the chair, the aircon, the floor rug, the cabinet where it's gonna store information, the memory stick, the server, and all those things. So how am I gonna do that? So those are important essentials when you talk about capital budget. On the operational expense budget, you may want to have budget to service the capital budget items. Okay, what's going to happen when the printer is broken down? What's going to happen when the door is no longer opening? The sliding door doesn't want to move. The keys have been broken. The bulbs are not working, and so forth. So operational budget normally finances these 2 budget items. How much resources do you spend on your staff members to better equip them to deal well with the company? Indicate if they know the purpose of this exercise. Okay, staff cost, they are normally part of the operational budget. Okay, because if you buy them laptop, you find that they don't know how to use Excel there. Okay, so this question is gonna ask you, this operational question is gonna help you to answer issues related to capital budget. Tools to be used to spy on competitors talents, staff attitude, when you get to business, to their business premises. How is the staff attitude, skill, execution? How do they do things? Do you see new faces there, or you see constant faces that have also grown to understand you? And online reputation, what are the people saying about this business. Other ways to book cash resources. You may want financial support from other people, increase the visibility to monitor other resources and network opportunities as you move and becoming available on the platforms where your competitors also feature. How many revenue streams does your business have? Um, that might also an important question, but also we must stress out that uh, that question also requires a lot of creativity, content creativity. Searching for a new product is not always easy because it means that you are splitting your attention into a number of product segments, that is revenue streams in your business, and you may want additional employees to help you with that. So the question has always been, do you have resources? Will you be able to cope with that? And all those things. Do you know how much? Do you know how to spy on your competitors' access? Yes, are they doing more frequent promotions? But it's difficult for you to do this if you are selling clothes because there are always um, promotions at the end of each season on clothing retails. Okay, payment terms, are they delaying payment? Are they asking for more discounts, cash and bulk discounts, and so forth? Leasing versus ownership. They prefer to lease than to own the assets. They are involved. Most of their assets are on a sale and a lease back. And why are they doing that? They do that to open up cash flow avenues inside their businesses. Staff payments are delayed. Payments are not all paid. The staff members are paid half of their salaries and so forth. Things are really not working well in there. But the competition is excited to say that because they think that we are going down, and because of that, we are going to open up an avenue for them to excel in what they do. All right. Have you published an announcement that you want more funds into your business? And what is the reaction to that? Okay, because the first people who will see that are your competitors. Okay, do you have a strategy to make fund announcements or not? Okay, tools you should do without fail. Keep a list of your competitors, analyze their strategy, evaluate their talents, monitor their cash flow, then innovate and adapt. Yeah, that is a full-time job. It needs a separate someone who would do that. And even if you don't meet with that person on a day-to-day basis, that will be someone who will still send you a voice note and tell you, so that you listen to those as you drive, you listen to those as you think strategically along your trips, than to sit down and listen to someone, because normally it takes a lot of time. So you just have to have strategies to deal with those instances there. All right. Do not forget that you are a competitor too. What you are scared to do, your competitors are doing it against you. All right. Yeah, that's a very scary statement, but that statement is true, and it requires quite a lot of attention as well. All right. That summed up the chapter about competition. That was chapter 8. Then chapter 7. Then we went to chapter 8. That is members of the public community where the business trades. And here also we saw quite a number of questions cropping up, and those questions demanded some answers also, to say who is actually not a member of the community. Put aside the information that we have labeled in the financial statements as belonging to the suppliers, customers, lenders, shareholders. But if you take out their caps in your company, you will find that those people are also members of the community. Okay, can you also view The 9 users of financial statements outside their primary financial statements. Yes, if you take out their caps, you'll find that you find a genuine set of community members there. Are you able to map your small business environment ecosystem? Yes, because volume 7, that is Cycle CPD 2, has helped me to do that. What strategy does your business use to build up an effective ecosystem? Well, we have taken the strategy that is sitting at cycle 1.4 as CPD, and we have expanded on the car to come up with an effective strategy that is going to address our users of financial statements and the things that we need to improve on in our business. What are the community engagement benefits? There are four of them. One, customer loyalty, staff retention, local partnership, and resource access. From here, you would have picked up that really there are similarities between some of the things that we see in chapter 8, chapter 7, and some of the benefits that we have seen even on other chapters as well. Okay, so what is important is that as you develop your strategy, you learn how these chapters relate to one another and what are the common areas, the intersection areas where your users of financial statements will meet. What are some engagement strategies? Hiring locally, collaborate, run campaigns, and participate. One of the examples that we made on hiring locally is the example that was happening in the area of Sasolberg. All right, you will remember that example in the previous slides. Okay. Take note of your business community engagement opportunities. Be available, connect with the ward councillors, connect with the local community so that they contact you if there are engagements that are happening, so that you are visible and you are known to be part of them. You are part of their community objectives. You cry with them, you share fears with them, and you also enjoy successes with them. Okay, have a list of your pertinent regulatory stakeholders, your SARS, your CIPC, the Department of Labor. Some institutions may have additional regulatory environment regulators other than these three. So have a list of those so that you comply with those people strictly, okay, because you don't want to be in a bad side of your share of your regulatory stakeholders. What are your company's environmental obligations? You'll find that it's something that you haven't even looked at. You know, it's something that you have not considered ever since your business started. But because you have went through this education with us, now things are starting to open up, things are starting to show up, and now you have now tried to improve your business. There's nothing wrong when you are writing your business profile to make these affirmance that now that you are part of this community, this is how you see things, this is how you are moving forward, and these are the tools, and this is the type of help that you are getting from SBPSA. Okay. What are the members of the communities look for from the financial statements you produce? There are a number of things. They will look for social impact, local employment, we've been talking about, environment, investment, and educational support, primarily to their kids in most instances. All right. Common leadership tools for enhancing the company values. There are normally four of them. It's the strategy, is the resources, is the implementation, reporting. I think the last one, the fifth one, is monitoring and evaluation. All right, to say how do you monitor your strategy? Is the strategy leading you to the direction that you want? Are the resources really funding the strategy? And the implementation of those two, the reporting of the strategy and resources, and the monitoring and evaluation. Okay, what the company needs, what are the community needs to see from the company's financial point of view. Okay, so there are four of them. It's financial reporting, compliance, transparency, and strategic direction. Okay, I think for me, if the author here had said strategic direction, then as a main heading, then enlists the three: financial reporting, compliance, and transparency as the three different categories of strategic direction. Okay, now that led us into the end of chapter 7 and 8, and led us to the beginning of cycle 2.6 CPD that talked about directors and management of the company, chapter 9, and conclusion to that. So once we are done with these two chapters, we're gonna go and look at phase 3, that is volume 5. And volume 5 is talking about the understanding of the entity, its environment, and its internal controls. All right. Now, let me welcome you to this last CPT, cycle CPT, that is cycle CPT 2.6. Okay. I must really appreciate the amount of listening that you have been into, taking notes, asking questions in our study platform, and getting clarity even from other guys inside the platform. So you have been holding on to this cycle CPT for some time. So welcome to this cycle CPT 2.6. This cycle 2.6, this is cycle 2.6, and we are sure that it is something that you have been waiting for some time, because we've been dealing with a number of cycle CPTs and you've been hoping to finish. Okay, it was a long cycle, and we are sure that you managed to stay well and comfortable, and you have learned a lot from it thus far. All right. This chapter is about the directors of the companies, and is about two more things: their role in the preparation of financial statements and the information they need for their own purposes on the financial statements. We're not talking about the directors for the first time. We have been talking about directors since the introduction of this chapter, chapter 1 and 2. Hence, we have talked about two types of directors: the single directors and the director shareholders as well. And we are sure that you have made a significant distinction between the two. In this chapter, we'll see the directors further occupying two important positions, as we have mentioned, being the suppliers of financial information. That is, they will be producing the financial statements for the other users of financial statements. And we'll also see the directors of the company being the consumers of the financial statements. That is, being in the position to use the financial statements for decision making. Key to this is that the directors must produce accurate financial statements, and they must produce a complete set of financial statements as well. At this point, you will also learn that all other users of financial statements rely on the directors for the complying with the relevant laws, for the safekeeping of the company interest, for making sure that financial statements preparation is accurate, and for making sure that the financial statement preparation is complete, and also to understand the responsibilities they have in relation to other users of financial statements. So you can see the amount of work that the directors have on their shoulders to ensure that they satisfy the needs of other users of financial statements. Okay. Directors as financial statement users and preparers. This presentation explores the critical role of directors and management in preparing and using financial statements. We will examine their legal responsibilities, challenges, and best practices for ensuring financial reporting compliance. All right, in this chapter, we have talked about the advantages of being a director shareholder, including the benefits in which these come with. as the custodian of the business, you will also say that there's a lot of expectation from the directors in terms of what they are expected to know and how they should deal with other business stakeholders. You will soon learn that the responsibilities of operating a company are more than making money. Hence, there is a justification for the small business practice, for the small business practitioners of South Africa to exist, to share the load of what must be known in this sector. The small business practitioners of South Africa acts as a champion in making sure that there is compliance and education within small businesses in South Africa, and that there is prosperity that ensures that business don't start and end small. To direct a company is informed decision and comes with a number of responsibilities which we have now started to provide. We know that at the beginning, people think that, oh, a company is about registering it. In fact, we have now demonstrated to you that there is more to it. In addition to this, Volume 22 talks specifically about the directors. Their roles include critical information about how they should carry themselves. In other words, if you are a director, you must understand the responsibilities that are in your shoulders. There is also information you need to know about the directors in volume 11 as well. That is chapter 1 of volume 11. That is introduction to some of the things that you need to know. If you will remember from the previous cycle, the directors are required to develop a strategy, take the car in cycle 1.4 in developing their strategy, prepare the budget, that is operational budget, personal budget, capital budget, prepare the books of accounts, prepare the management accounts, prepare the financial statements. Also, we must make you remember that in preparing financial statements, we are expecting the financial statements that are complete. We are expecting financial statements that are accurate. Then we are expecting the financial statements that are based on SPPSA guidelines. When we talk about directors, we infuse in those sole proprietors that are sitting there so that they are not viewed in isolation they also have a home to belong into. We're talking about partnerships as they are included as part of directors as well. Okay, in today's agenda, we will be talking about 4 quadrants, that is the director's dual role, the legal compliance, the director's responsibility, the leadership impact. Okay, with the dual role, we want you to understand directors as both users and preparers of financial statements. This is where or what is the central aim of this discussion. Legal requirements. Please view this in terms of volume 11 and volume 21 to mention a few. There might be a need to look at section 29 and 30 of the Companies Act and compliance obligation. The director's responsibilities include, amongst other things, documentation, systems, control, and accountability. All right, so those are the things that directors will need to know and understand there. Okay. Leadership impact, how effective governance contributes to business success. This volume, if you have really paid attention, is about elements of governance. It is a starting point towards small business governance. It is informative in nature and allows fundamental understanding of how users of financial statements should behave both individually and collectively. Okay, so we agree to that really someone who listens into this volume to this series will immediately get into grasp in terms of what is really expected of a director in a small business environment. The unique position of directors. Directors occupy a unique position in the financial reporting ecosystem. They are employees of the company with personal interest in the financial information. This is because the directors are the breadwinners of their homes as well. They bear they bear ultimate responsibility for producing credible and useful financial statements. This is because financial statements uh, this is because they've got a responsibility to produce financial statements that talk exactly to the financial position of the entity. They are not putting more resources in cooking the financial statements, but they are putting more resources in producing financial statements that matter and that are traceable into supporting documents. They ensure all information is reported correctly and accurately. Otherwise, there will be no growth in the company. All right, so this company will not go forward. They need to understand the regulatory requirements governing the financial statements because the company is a juristic person in its right. You will also see that law is an extensive in this regard as well. SPPSA has a plan of making the small business environment better, reliable, professional, and prospering as well. Now we have been able to start a discussion about the way forward within the small business environment. So this course is really essential for people who have started their business, who want to get into business, who have been into business, and people that have left the small business environment as well, because it's more informative. Legal framework, that is section 31, timing requirements. All right, financial statements must be available within 6 months after the end of the financial statement. Okay, this is what we will use to calculate provisional tax. Hence, sometimes we'll do financial statements for the first 6 months after the year end. Okay. Then, if you don't know what is your year end, get the CK and understand what information is there about your year end. Okay, because we understand that most people have asked the accountants to do the companies for them and register those companies with the CIPC. So we have seen that there are lots of companies with the 28th February year end. You can't. It's you must consider yourself very lucky if you see any other financial year end like March, June, April, May, August, September. There are very few, and it is like those. All right. So most accountants are fascinated for having 28th February or last day of February as a year end. Okay. Audit requirements, depending on the nature of the company, financial statements may be audited as well. We'll talk about this in volume 3, volume 14, and volume 15. It is a wise thought to decide in advance to get into the understanding of how financial statements have to be prepared accurately and completely. It is a very expensive exercise to switch into auditing at a later stage. Do not go out of auditing once your entity has started being audited. Understanding the fact that it may be cheap to use unqualified accountants, but it may be costly in the long run because they don't normally know all the work. Avoiding switching on and off avoid switching on and off accountants all the time. All the time you've got a disagreement with the accountant, you switch that accountant. All the time you like someone, you change the other one you liked into the new like. It is wrong and creates a reporting instability in your business. Independent reviews. Some financial statements require independent review in terms of regulation number 29. A review is not the same as auditing and may require a young compliance than a full statutory audit. However, there might be no need for it if shareholders want their financial statements to be audited. So you must just gather enough information there to say what approach you must follow. Financial statements must comply with the prescribed financial reporting standards, that is IFRS or IFRS for SMEs. So SPPSA is not responsible for the reporting of the financial statements to the financial statements. It is responsible for supporting the financial statements. So your accountant will know what IFRS they must use, whether they are using a full IFRS or they are using an IFRS for SMMEs. If you are not a member of SPPSA, talk to your accountant so that they guide you exactly in terms of how your business must behave when it comes to these IFRSs. These requirements provide directors with sufficient time to ensure financial statements are accurate, complete, credible, and dependable as well. Because what you don't want to invest in an accountant that is gonna focus on cooking your books and later on put your business into trouble. You must remember that even though you have asked your accountant to prepare financial statements for you, that does not divorce you from your responsibility of preparing the financial statements. So your accountant must spend time creating the financial statements that matter. Okay. So Section 29 requirements, there are two types of requirements in Section 29 that we see. We see content requirements. We're also going to see this in Volume 21. We see content requirements, that is satisfying prescribed financial standards. That is the responsibility of the accountant. Present fairly the state of affairs of the company. Your accountant should know this. Okay. So when we talk about the state of affairs, are your financial statements based on lies, or are your financial statements showing an impressive picture but are based on lies, or your financial statements are showing a worrying picture but they are accurate? Okay. Show assets, liabilities, equity, then that you will do in the balance sheet. Show your income and expenses, that you will do in the income statement. We just want to put a specific emphasis on the income statement, that your income must be accurately determined and your expenses must be carefully determined. Set out publication date and accounting period. That information you will get it from your CK. Financial statements present fairly only when each amount has a correct source document. If you know what your financial statements are, the figures are coming from. If you don't know where the figures are coming from, then it means they cannot be traced. And then it means that your financial statements do not exist. You are just producing lies. Okay. If we look on the CK, you may want to publish the financial statements twice, because you also want to make sure that you've got better or you've got accurate information that is going to help you to close RIP6, okay, for the 6 months, and for the second month, for the first 6 months, and for the second 6 months of the year. Disclosure requirements indicate whether the statements are audited, independently reviewed, or neither. Okay, normally this information will get it from the cover page, and the accountant will advise you into that. Make sure that you get the qualifications of the accountant or the auditor, the name of the process of the preparer, and the designations there too. Your financial statements must not be false, misleading, or incomplete in any material respect. Okay. The aim of the financial statement is to bring clarity, confidence, and ensure that the financial statements comply. That is the purpose of the financial statements. Okay, so that is why in this series we want accountants and directors to attend this together, so that they understand how these things work, and to understand what information they both have to know together. Because there's this perception that it is the responsibility of the accountant to prepare the financial statements, and the directors have got no responsibility towards that. So we're trying to break that ice and make it a point that we've got two types of attendees. we've got the users, we've got the directors of the companies and the accountants, so that the directors have got time to ask questions about what their role is on the preparation of financial statements. This slide is about directors' responsibility. Also, we must take note that in the director's report, in the director's responsibility, there will be a director's report as well. Okay. Then we have to ask ourselves what to be signed. Okay. Do you know that you also have to prepare the director's report? At each time your accountant is asking you to sign, have you asked the question, what is it exactly that I'm signing for? Okay. Do you think you are adequately trained and prepared to sign in the space the accountant is going to be showing you to sign at? Okay. If you feel like you don't, you are not qualified and you don't understand what you are signing for, then join SBPSA for the mastery of these concepts. The director's responsibility statement formalizes the accountability of the directors for the financial statements, requiring their signature to conform and understand the acceptance of their responsibilities. However, you will not know or understand this without getting into SPSA's education, training, and guidance. Hence, now we have had a number of instances where directors will come and say, no, we did not know that this is my responsibility. I didn't know that this is what I should do. I didn't know that this is what it meant to run a company. So those questions are no longer there, because there is an institute that is dealing with the small business education. So we are also urging auditors to prescribe their customers to SPPSA to get into this information, so that there is some learning in terms of what really must happen. All right. So what information should their customers have? Okay. We also urge government to prescribe their customers into small business practitioners of South Africa, so that by the time they fund them, they at least understand that there is a base that is there. There is some form of responsibility that has been taught, so that we don't see this number of companies closing down, okay, or companies misusing the financial resources that government is providing. Supporting documents, documentation requirements. There are four of these. Maintain adequate records. That is number one. Each figure in the financial statements must be traced to authentic supporting documents. Where are the records to support this figure? That's what the small business practitioner should ask. How many you cannot find? In other words, if you get if in the financial statement there is stationery 16,000, so are we able to go back and see supporting documents that relate to 16,000? Okay. So that's what we are. That's why we're asking the how many you can find. The more you cannot find or produce, the more the challenges are, because the more your financial information is not correct. Preserve financial statement documents. Ensure supporting documents are not lost, damaged, destroyed, or altered without your approval. Learn both the manual and electronic forms of document management. Put aside a budget for document management. Remember, if it has no document, it does not exist, especially for financial statements that will still go for auditing as well. Okay. Establish systems and controls. That is number three. Implement methods to ensure operational integrity with mitigating procedures for when things go wrong. Okay. We have touched a little bit about this in volume 5. Controls are all about the safekeeping of financial statements and financial information. Discussed at length in volume 22, small business financial information controls. Okay, then we go to number 4, select appropriate policies. Choose suitable accounting policies, estimates, and professional judgments to ensure fair presentation. This will be done together with the assistance of the accountant. So the accountant, because remember what we said SPPSA does not prepare financial statements. We don't prepare financial statements, but we give guidance on first how the financial statement, what must back up the financial statements, and what additional information we want from the financial statements. Okay. So, talking to your accountant will help you to understand this, and the accountant's responsibility is to make sure that the information is packaged very well. Hence, you must make sure that you get the right accountant to do your business. Don't be fascinated about the charge, the amount the accountant charges you. Be fascinated about how much your accountant knows. All right. The outsourcing challenge here is a business practitioner is a medical doctor, then he goes out to find an accountant. So that accountant prepares the financial information for the doctor, and the doctor will normally make a mistake that it is the accountant that is responsible. No, you are responsible because the accountant is employed by you. The accountant should be using the information that you as the doctor provide him. Okay, so there's no stage where you will divorce yourself from what it does. All right. So if the accountant is reporting fraudulently on the financial statements, chances are you will be arrested. Okay, because you have signed the financial statements. All right. Okay. This is a common issue within the small business environment where there is a disjuncture in terms of who is responsible for what and why, then who must take the ultimate responsibility there. Most business directors source financial statement preparation to their financial information providers, the FIFs, creating potential confusion about their responsibility. It is still your financial statements are still your responsibility. The fact that you cannot prepare them doesn't mean that you are no longer responsible for them. All right, so get that clear out of your mind. Okay. Few directors can prepare their financial statements, like directors who own auditing firms, directors who own accounting firms, like ourselves, and so forth. Many don't know what information is used in preparing the financial statement. That is wrong. When you prepare financial statements for a client, you prepare financial statements based on the information that you are getting from the client. You specify what information you're gonna need from the director, and once the financial statements have been prepared, you must then go and explain the financial information to the director, and you must be in a position to explain where the figures are coming from. Well, as, as from the inception of the engagement where we are taking over the client, you must sit down with the director and take him through what you expect him to know and to gather for you. Okay. And do not ask their fifths to explain the logic around the preparation of financial statements. Yeah, that is uh, where most of the directors will fail there. Critical point, even when preparation is outsourced to fifth, the director retain ultimate responsibility for the financial statement. We've already covered that. The director's signature on the financial statements confirms that you understand this understanding. Outsourcing does not take this responsibility away. It remains the director's responsibility. Financial statements remain the responsibility of the director. You cannot say, please talk to my accountant when the question has been passed to you, whether by SARS, by Department of Labor. You have to say something about the finances of your business, especially when you are the one who have submitted the financial statement and your signature has been appended on the financial statement. All right, so this is why now we're training both the accountants and directors at the same time, because that's what we want to see. We want an improvement in terms of the understanding of the financial information from both sides, and we want to create an important conversation between these two types of people so that they understand their responsibilities against one another, so that there is no blame factor between the two. All right, so we are excited that we have started this platform. The value of leadership is in four quadrants. vision setters. Directors establish strategic direction and long-term goals of organizations. All right, that is true. Whether this is done in a what we have seen is that directors who are also shareholders, it's easy for them to do this. But where there's a separation between a director and the shareholder, that will require a meeting where the shareholder explains what the directors want them to do, or where the shareholder buys an existing and a well-flowing company. There's no need for this one. Okay, directors are also risk managers. Okay, leadership identifies, assesses, and mitigates potential threats to business. Hence, you need to have a business plan, you need to have a business strategy, you need to have a budget, you need to have projections. And some of the business also have what we call a SWOT analysis. Okay, we'll talk about some of these in volume 19, especially the business plan. Okay, resource allocation. Directors determine how financials and human resources are distributed to achieve these objectives. So financial will normally be operational, and then human resources will also follow operational, personnel, and capital budgets. Then you go to culture builders, managers or directors shapes the organization values, organizational values, ethics, and workplace. So that's why there is so much emphasis on the qualification of directors to say if you are a director, you are assumed to know. You cannot say no, I don't know. You are assumed to know some of the things that are happening in your company. Strong leadership structures create organizational discipline, promote ethical conduct, and ensure alignment between operations and long term. So just get that straight to say these are the responsibilities you have as a directors, these are the roles, and this is how you're gonna achieve these in your business. Because you cannot come up and say, no, I wasn't aware, I did not know any of this. All right, then we come to the five key director responsibilities. One, strategic planning and execution, setting direction and ensuring implementation of business objectives. This helps to point the direction for the business, even if someone else is running the company. Because what we're trying to do with SPPSA, we're trying to relieve the small business practitioners. You must not always be there. So you can employ someone who have trained and who have been listening to our courses as your substitute whilst you are not there, or someone who will help you to run your business with you because he has got an understanding of what must be done in terms of the information the person has gotten from us. Compliance, ensuring adherence to legal and industry standards. This person must understand the laws and regulations, that is the director, which are relevant to the company. This requires attention to the company and the company needs. All right. Then we go to the financial control and reporting, that is number 3. The role here is to oversee financial health and accurate reporting. Okay. This requires training, education, and understanding of small business guidelines. So these are the things that you must understand as you move forward. Then there's also human resource, managing recruitment, training, and staff motivations. Okay, it's not always easy to deal with employees as it often requires a dedicated function to do that. Having staff members directly reporting to you may create challenges for the business. Yes, it is expensive to create different divisions within the small business environment and may take some time and a form of resources. Some people do not take small businesses seriously and may not align into what you actually want. Okay, so directors must be knowledgeable about these challenges and find a way to pave their situations forward. Maintaining accountability to all relevant stakeholders would mean that directors are responsible for the both internal and external factors. Each of these requires a significant amount of attention. This shows how experience is built and what must be mastered throughout. It may take time, practice, training, and education to cope well with all these requirements. Hence, SPPSA exists. So there is a reason really for SPPSA to exist, to offload some of the responsibilities from people's shoulders, but also to include some of these responsibilities, because most people are not aware in terms of what exactly they should be responsible for. So with the help of SPPSA, we are now enlightened. What are the leadership roles in the small business environment? We talked about this in the previous chapters. There are a number of roles that we can see. That is the managing director, the person who is running the business, the financial director, although we said this role is normally an outsourced functions. Then we've got operations manager, the person who takes charge of how the business performs. And we also have an HR person. Okay, very important function, the HR person, because it talks to the well-being of the companies, as employees are the key as employees are key to small businesses and may need attention. However, within a limited budget, this may prove to be a challenge. Okay, financial director, normally you will not find this person inside the business because it is an outsourced function. Most small business managers have not found how to properly utilize the services of their accountants. Okay. So if we look on the functions, so the managing director oversees the strategy and operations. Then the financial director will handle budgets and reporting. Then the operations manager ensures smooth day-to-day running. Then the people's management will ensure that hires right people, and there is also staff development. So what are the implications of these roles and functions? For the managing director, that person must balance the vision with the cash flow realities. Then the financial director must keep books clean, investor ready, and accurate. Operations manager must deliver customer promises efficiently, and human resources must build loyal and, and capable teams. What is the reflection question? Your business had to add an external aspect to your team today, what skill or experience would you prioritize? Okay, if there can be someone who says I can sponsor you with one person, okay, what type of skill would you prioritize? Okay, would you say no, I want an accountant, or would you say no, I want an HR person, or would you say I want what type of a person would you really prioritize? Okay. For more information on the alignment of business objections, goals, coherence, and functions, find this in volume 23. Okay, so you can see that there's a lot of work that is sitting on volume 23, volume 22, and volume 21. Okay, so please pay attention there so that you don't miss out. Okay, directors, multiple roles. Now you can see that opening a company is not all about doing what you know. If you're a medical doctor, it's not all about injecting people and give them medication. There are a lot of other roles that you must respect. We talked about that the directors often assume multiple user roles within the company. Okay, they may be shareholders, creating both that they are shareholders, create both advantages and challenges. We talked about dual roles in chapter 1 and chapter 2 in this series. Okay, they could be customers of the company, especially when the company sells general disposable goods, or what is called a high or fast moving goods. Okay, some act as lenders to the business itself, especially when there are more business, there are higher returns. There are more chances to give money and get a high returns. Others might be suppliers of the company's goods. That is dual shareholding, where you find that this company, this director is owning this company and this company. Okay, so this company is a customer to this, and this one is the supplier to this. Okay, and because of that, there are a number of high returns between in having that type of an arrangement. Okay, so you will see these dual company holdings on situations like mergers and acquisitions, when a company is doing well but managed wrong, so someone will want to buy it and start realizing good benefits there, or by a particular stage. When director is also a shareholder, there is less burden to report to shareholders, but this dual role creates some complexities. It might also create confusion on what the company really stands for. Dual companies are not good in reporting and other compliance issues because there are no related watchdogs. Okay, so those what we see there are more disadvantages of multiple roles other than the advantages there. So be careful of that as you proceed. All right, so understand which position do you hold within the company. Leadership as a competitive advantage. There are four quadrants to that. So quadrant number one, we talk about culture shaping. That is, strong leaders create environment where employees thrive and innovation flourishes. With policy-related documents and respect, appropriate levels of reporting are essential, even though will come at a cost. But at least you know what you are looking at, and you can find your way around dealing with this cost. But if you don't know what is the expectation or what is expected of you, you might find it difficult to understand where costs should be going because there is no direction for the company as well. Effective directors ensure regulatory requirements become competitive advantages rather than burdens. They start by employing these on time, understanding what their statutory duties are, and seek to perfect them as more responsibilities are added. Okay, so it is better to get into SPPSA, start to learn these things so that you can shape your mind on how to respond on them than to stay there in the dark and not know anything about them. Skilled management maximizes employee potential and operational efficiency. Okay. Confidence, trustworthy leaderships attracts and retain financial backing. Okay. As a result, these entities are free from compliance burdens since they have learned to confront these at an early stage of their lives. Okay. So, if we go back to performance optimization, where we talked about skilled management maximizes employee potential and operational efficiency. Okay, I just want to talk a little bit about these two because it means that there are two further quadrants that are coming from here: the employee potential and operational efficiency. What do we mean when we talk about employee potential? We talk about having an organogram in the business, to have correct recruitment strategies, ensure that the right personnel occupies right roles, getting serious about career pathing within the business, provide personalized learning and development opportunities, shift to modern performance management styles, foster a culture based on continuous learning and a growth mindset, recognize and rewards achievements, be a great mentor and professional example in every sense, but do not seek to impress your junior employees, enhance emotional intelligence, that is the EQ, and soft skills. Okay, that's what we have talked about there. But if we're talking about operational efficiency now as the sub quadrant to performance optimization, you can master that by conducting an efficient audit which will identify bottlenecks within the entity, streamline and optimize processes, invest in employee training and development, leverage technology and automation, foster open communication and collaboration, promote employee engagement and well-being, set clear goals and establish baselines, monitor and measure. Monitor, measure, and adjust. So whatever you do, it must follow these guidelines. Okay, so I think it was a very informative slide, and we've managed to pick up a lot of information from that regard. Leadership and investment checklist. There are 4 quadrants in there as well. We're talking about skills assessment. We're talking about benchmarking. We're talking about training balance, and we're talking about succession plan. If we go to the first one, where we're talking about skills assessment, we say, have you assessed the skills and gaps in your current leadership team? That is yourself and most of the close people to you. Okay. Employees should complete skills demand analysis where they specify their development areas even before you ask them. This must be included in a yearly plan and to say, okay, this employee needs this type of training for him or her to perform better, and this is the time in which I will provide this training. Okay. Unique and different projects I would like to expose, or is a quick way to expose the lack of skills. When you sometimes you won't really understand if employees need additional skills up until they are exposed to new projects, or when they are swiping roles. Then that employee start to struggle because he's doing something outside from what he was doing. So then that's when you will know that, okay, if this employee is not at work, that function cannot be done. Yet if I am giving training, if I give training to this employee to do this type of work, and give this employee to do this type of work, so I won't have idle time in my business. Benchmarking. Do you benchmark your leaders against industry standards? Okay, normally this information is not easy to find within the small business environment because the information about industry is not really available. That is something now that we are trying to do, to make the information to be industry available. All right, because now we are creating conversation, we're creating talking points within the small business. So we are now going to track where the people are struggling and find solutions for those ones. Training balance. Are your managers trained in both technical and people skills? Sometimes it is difficult to confirm if training really works up until a particular event occur. That's when you will know that, okay, we're unable to deal with this. I remember at some stage when we were faced with this, we could not overcome it, and hence we started to train our people like that one. Hardly on the cards for small businesses because businesses are personalized. There are costs in the small business. There are difficulties to do it, and some people will lose interest in getting into them, and as a result, you find that when the owner dies, the business dies as well. But it is something that can be done if it is known about on time and is talked more about it, and people are trained more about thinking about it. Okay. Final reflection. What investments are you making today in the leaders of your business tomorrow, even to yourself, because you are also regarded as the leader of your business? So, what are the things that you are doing? What have you done to make sure that even when you pass, your business will continue, unless you really want your business to die with you, then there is no problem with that. Okay. Coming close to the end of the chapter, we're talking about 2 things that we should remember: the director's responsibilities and leadership impact. So, if we go to the director's responsibilities, we find that directors have have an ultimate responsibility for financial statements. Even when preparation is outsourced, it remains their responsibilities. That is if they have been prepared by someone else, the financial statements. But if you also responsible for preparing your financial statements, then there is no problem with that. Okay. They must ensure compliance with Section 29 and 30 of the Companies Act. Okay, we have been talking about this throughout this, and we have made reference to Volume 21, Volume 22, and Volume 23. Supporting documents must be maintained, preserved, and traced to financial statements figures. Okay, we want to put an emphasis here that if there is no document, the amount does not exist in the financial statements. Directing a business is not about occupational activities. There are other equalizing responsibilities that require attention of the directors as well. So at least now we are aware of what the directors should know. Okay, effective leadership is not optional; it is essential for business sustainability. Here we want to make you remember that SPPSA insists business must operate in perpetuity there. Strong governance creates organizational discipline and ethical conduct, but this must be known and practiced the same way within the institution. Coherence matters here. So the way the directors understand things, the same way that information must be boiled, must be drilled down to operational level employees. Leadership quality can be significant competitive advantage. Small business practitioners must first identify themselves as leaders, hence they must get into SPPS training to get into an understanding of how these things are done. Investment in leadership development yields long-term returns. Think of a succession planning for your business as well. That sums up chapter 9, which completes the information that we needed to know about the users of financial statements. So far, the 9 users of financial statements. Now we are getting to chapter 10, that is the conclusion. Chapter 10 is gonna get into just high level areas of what we must remember as we finish up and as we take into account all the users of financial statements in totality there. All right, so it's very important that we at least summarize what we have now done. Okay, now taking into account all the users of financial statements, okay, to say what is it that we should remember. Building a professional business, a practical manifesto. Both good and bad habits start small, yet they've got a long-term bearing effect. So you might not have a full-blown budget for something, but if you start taking care of it from early, you'll realize that as your business progresses, it's doing well. So that is that. But if you also start bad habits from early stages, your business will die very badly. And normally it will die with you as well, or it will die even before you. Okay. This presentation has been nothing else but a practical guide for small business owners ready to build, lead, and thrive in a competitive environment. In this module, we hope that uh, in this conclusion, we hope in this volume we have the transformative path from basic compliance to strategic influence across the 10 areas of business professionalism. All right. So those are the things that we want to leave with you after we've taken care of all the 9 users of financial statements. What is the agenda for our conclusion? Okay. So we're talking about your path to your business excellence. We have 3 quadrants. The quadrant number 1 is that now you need to understand your stakeholders. Exploring the key relationship that drives business successes. That is, now you understand who your shareholders are, you understand yourself, you understand your role, you understand the lenders, you understand what they want from the financial statements, you understand the suppliers, who they are, how are they defined, what information they want from the financial statements, you understand your employees, you understand what they are looking for, You understand government, you understand what government wants, you understand the customers, you understand the competitors, community, and the directors of financial statements. Do you know do you now your utmost responsibility in relationship to the overall business requirements? That is the question that has been asked over there. Strategic pillars, examining the five fundamental foundational pillars for professionalizing your business: professionalism as a system, financial discipline, employee development, compliance, and customer or community engagement. Okay, there are a number of questions here we might ask. Do you have a plan that talks to these issues? Okay, how have your business been doing in this area before you met us? Okay, are there any lessons that you have learned from this series? How these lessons have helped you to shape up your business for the future? All right, practical implementation, actionable steps to transform your business include reflection exercise and funding opportunities to support your growth journey. These all requirements, you must spend a few time or minutes and reflect on how the business is doing going forward. We have opened your eyes in terms of how you must look at your business and you must view your business as an asset. It might be difficult to do this because you are the only one perhaps involved in the business, but now you've got information that you know, but what you don't have is someone to do it, unlike in the past where you didn't know what must be done and you didn't have someone to do that. Okay, however, breaking this into crunches can help you break this difficulty over time, only if it is known in time and you are doing something about it. Don't forget to keep a journal of how your business must proceed going forward. This presentation condenses a comprehensive business guide into a practical insight for South African entrepreneurs seeking to professionalize their operations. Okay, so now your eyes have been opened, but the question is, what do you do about it? Does it create a conversation between you and the other small businesses, or does it create a conversation between you and your accountant as well? Do you now feel like you've got something to say to your accountant? And when the accountant is doing something for you, do you now have power to want to know more what that information is, where that information is coming from, and what that information is all about? Do you now have information sessions between yourself and your accountant where your accountant explains some of the assertions the accountant is making on the financial statements? Are you giving your accountant enough information? Are you giving your accountant right information? Are you encouraging your accountant to cook the books for you, or are you both looking to do what is right for the business? We talked about the stakeholder ecosystem. Let us remember who these people are and for what they stand for. How do we view these and how they should perceive themselves at the end of this course? Remember, we talked about these when we started the course, and now we're talking about them at the end of the course. So we now see how we have moved from one point at the beginning to another point at the end. When we started, we talked about shareholders and investors. And we said these people create and protect value through transparency and trust with those who contribute equity and oversight, because shareholders are going to come with money and they want information to be reported to them amongst themselves, and people like auditors. That is where oversight is also created and strengthened there. Okay, we talked about employees. Recognize that people are your business in motion, requiring attention to unions, well-being, and BEE alignment. These are humans before they become employees. They are breadwinners who connect to the broader society. Respect them and appreciate their effort. Make them feel important in all times. You will see the results in your business. We talked about lenders and financiers. Present your business as a disciplined and budget conscious to navigate risk and secure capital when you're talking to your lenders. Okay, we said get into a habit of doing things right at the beginning to satisfy the users of financial statements. It is important that you get this early education about your roles and responsibilities and practice by associating yourself with entities that subscribed to SPPSA and SPPSA themselves. We talked about suppliers. We said here the purpose is to build relationships beyond price, focusing on quality and reliability that impacts your financial statements. Focus also on after sales effect and memorable experiences. The value for money talks more here. Remember, no customer without a supplier, no supplier without a customer. We got this even from the previous discussions that we have had. This is the most unique relationship we've found in the study of this cycle, and we're hopeful that you're gonna make use of it. Understanding these key relationships is fundamental to building professional business that can thrive into environments. That is the final statement in this part one of the ecosystem. However, we also talked about other members of the ecosystem, government and regulators. We said engage proactively with SARS, Department of Labor, and other agencies as a mark of integrity, but not as a burden. Okay, people who run away from these organizations are people who are not adequately trained, adequately prepared, and people who do not associate themselves with SPPSA. They've got no CPT training and are not associated with SPPSA. If you get in touch with these requirements, you will know that no problem you cannot solve together with your accountant. If you are educated well, you do have basic considerations you might want to look at right from the start. You will win these regulators without fear and further ado. We talked about community leadership. Invest invest in your community as a future clientele and workforce while ensuring capable leadership drives execution. It is advisable that if there is anything that you wish to do for your community, involve them first. Let them know you, make them understand what you stand for, be actively involved on the community programs. We also talked about customers. Recognize customers as co-authors of your brand who require privacy, responsiveness, and transparent quality. Respect and understanding is a key here. Do not forget your customers no matter how big or small your enterprise is or has become. Have time to listen, have time to engage, have time to find out how they feel about how you do things. We also talked about competition, and one of the things that we said that you must develop a strategy advantage, develop a strategic advantages through business models, pricing, staff quality, and customer service. However, you will need accurate data to take accurate decisions. At a small business environment, information about this is not always available. A professional business recognizes that success depends on effectively managing relationship with stakeholders that are within the ecosystem. So that's how we want to wrap up the understanding about these users of financial statements. And we're hopeful that you have learned something about these as well. We're talking about 5 strategic pillars for professionalization, that is leadership, system and standards, financial discipline, people development, community engagement. Think about your vision, the barriers to it whilst you are alive and shortly after you have passed. So when you open a business, remember that you may leave your business behind. So think about strategies for it to continue after your passing. But even before that, think about strategies to make your business more successful even before your passing. That is leadership. System and standards take time to develop. It takes time to develop it, but with you allocating time, set out how your business should operate so that there is an expectation of going concern. Financial discipline. Here we learn to separate business from personal values, avoid emotional spending as well. So when we talked about people development, we talked about long-term investment. People come and go. Do not panic. Keep your eyes on the vision and mission and the objectives of the business, and the way to attract the right talent over time will come through. We talked about community engagement. We said this is your backup. These are your backup friends of all times. Do not disappoint them, but win them over time. Always give an explanation on strategic objectives or strategic questions every time there's a question from them. Never run away from them. These five pillars form the foundation of professional business that can compete effectively, comply with regulations, root itself in the community, and maintain financial soundness. So these are the things that we wanted you to remember as we wrap up this chapter. So pillar number one, professionalism as a system. We said professionalism is not a posture. It is a system of policies, values, and actions embedded in daily lives. But do not enlist values that you cannot offer when the stakeholders want them. Shows in how to handle invoices, treat clients, managing the books. In this part, this shows the direction you are taking, indicates how things are done in your company and how well they are done. It may start easy, start at a low budget, but eventually it will be a successful exercise. Involve in the setting of standards, documentation of those standards, and accountability. You may not be able to do this at the beginning, but with the accumulation of time and experience, you will soon get used to it. If you are the member of SPPSA, you can do it first time as the training and education accumulates. Attracts better clients and employees. Make a split between adverts and services. Adverts get you new clients, and sales and services must retain your clients and give you further referrals. Makes excellence a daily habit. Make excellence a daily habit, not a campaign. Have a task journey. List your daily, weekly, monthly, and quarterly ambitions and track them as you go further into your strategy. Make regular reviews to identify improvement areas and areas of success, which sums up now pillar number one. So these are the things that we have talked about, but we're now summarizing them by consolidating them into one pillar, but taking from the information that we have learned from all the users of financial statements there, so that it's easier for you to package. Pillar number two, financial discipline. Weekly cash flow tracking, monitor your cash flow, as cash flow is your business oxygen, which needs to be supplied regularly, not just monthly. Financial discipline is the heartbeat of your business. Profitability is essential for sustainability there. Okay, so what is important now is that you must put attention on things that matter to you, helps you to gather information you need on time and act appropriately. So cash information will help you to do that. 100% measurement coverage. If you cannot measure it, you cannot manage it. What expenses? Now you need to ask yourself the following question: what expenses can you not cover? Keep revising your expenses so that you do away with expenses that you don't need, because these are taking money from your business. Look at the ways you can increase your revenues and cutting your expenses efficiently. All right. We talked about key financial statements. We said income statement must be accurate, balance sheet must be accurate, and cash flow statement must be accurate so that there are no problems about where the monies are coming from. Okay. So talk to your accountant, for your accountant to focus mainly on the accurateness of the financial statements. Financial discipline is the heartbeat of the business. Understanding where money comes in, where it leaks out, and how to grow your profitability is essential for your business sustainability. Communicate the areas of improvement with the entire staff personnel so that they all understand what direction the company is taking. Okay, so don't keep this to yourself, because employees are the biggest spender in your business. So have monthly meeting, make them understand where are the challenges, what needs to be done, how it needs to be done, when does it need to be done, and who are the employees who should be responsible for that. Pillar number 3, employee development. Your employees are not passengers, they are the crew. Train them, listen to them, and lead them. Make them understand the path the company direction is, or the company is taking. Make them understand what roles each employee has to play to fulfill this direction. Recognize people as your greatest assets. Making all the employees feel good is not easy and may lead to some of them not being happy. Learn over time to deal with these issues. It's a good thing for you that you have started with SPPSA. You're going to iron out these things as you move forward. Create a culture of growth and feedback. Make employees to have something to look for every time they wake up. Make them eager to go to work. Provide meaningful training after a skills audit or after individuals request. Reward effort transparently. Staff members must know what the reward criteria is and how people are rewarded, under which circumstances they are entitled to a reward and under which circumstances they are not. And don't create employee favors. Rise together with your team, make them understand the help you need from them, and and that and and where that will lead you as a firm as a whole. Okay, because the company is not about one person, but it is a team effort. So recognizing that team effort is a very important thing you can do for your business. Okay, but whatever you do, you must be transparent. Okay, so we're going to pillar number 4. Pillar number 4 is all about compliance as protection. Okay, legal adherence, not optional. It's a price of sustainable credibility. Make sure that your statutory compliance is in order and is in place. Compliance calendar, create a schedule for regulatory requirements. Also look at volume 4 as well. Professional advisors work with experts to navigate complex regulations, may make the company to incur some cost, but choose your cost effectively to say where is your cost leading you. Proactive approach, stay ready, not reactive, to avoid fines and reputational damage. Avoid instances where money is lost unnecessary. Make your employees to understand these challenges, because they also rely on the cash flow of the business. Your reputation is built in silence and lost in noise. Late tax returns, unregistered employees, and non-compliance attract fines and ruins the trust. So be careful they don't just do things anyhow. Okay. Then we go to pillar number 5, that is customer and consumer partnerships and community partnerships. Your customers and your communities are, and your community are your business partner. Their trust is your most valuable asset. Okay. If you vanish tomorrow, would your customers miss you? Impact and space you occupy must validate your existence. Would your community defend you? What have you done for them so far? Who can stand for you from them? Build your services that solve their problems or move towards this position. Have a plan on how to address this particular pillar. Engage your local area with sincerity. Open your days for open your doors for reachability. Make your community understand that you are available in all times they want you. This might take time from you. This might clash with other engagement, but make them understand. Brand loyalty is earned through relationships, not ads. Who is in your cycle, and for what purpose do you have those people in your cycle? Can you see that there's a lot that needs to be done or that needs to be written in your journal? Okay, so your journal has got more information about the business, how the business is gonna go forward, and what other things must be there. Your next step is your action plan. Here we've got 4 quadrants as well. Quadrant number 1, financial review. Review your income statement and identify one recurring cost you can optimize. You can only do that if your information on the financial statements is correct. Cash flow planning. Schedule a meeting with your accountant to discuss your cash flow for the next 6 months. This can be done properly if your information is accurate and complete. Otherwise, it will be a waste of time. It will serve no purpose because information is not accurate and cannot help you to fulfill your desire. Policy documentation. Begin documenting your HR policies if they are not already written. But this should followed by training, implementation, evaluation, and monitoring. We understand the cost associated with this, but start and vision how your HR department will look like starts here. Policy review is also important. Make these accessible and advise how to use these. Policies must also talk to the diversity and the availability of the organogram, and it will help to ease communication flow within the business. Compliance checklist. Identify one regulator where compliance can improve and minimize the cost of compliance. Talk to your accountant, share your fears with him, and ask him to bring a plan on how to deal with your compliance issues. Complete your action plan by hosting a small business appreciation day info or info session for your top 3 customers, a customer or community stakeholders that might need some form of a budget, but plan it in advance so that that exercise is a success. Reflect for growth. Ask yourself these questions after this cycle. What insight from this presentation surprised you most? If an investor visited you today, would your operation impress them? Which stakeholder relationship needs most improvement? What is an action you will take this week, this month, this quarter, this biannual, and this year? All right, which now sums up what we've prepared for you, which sums up volume 7, that is cycle 2 CPD. So, what are the things that we've looked at in this cycle? So, we talked about directors as both users and preparers of financial statements, coming from volume 1, from chapter 1 and 2. We saw directors becoming the suppliers and users of financial information. Do not be confused by the fact that they outsource this function, that is the preparation of financial statements, they still have the responsibility to make sure that and they are accountable for that information. 4 quadrants of their responsibility. We talked about directors' dual role. We talked about legal requirements. We talked about directors' responsibilities, and which also sees the directors' report as well. We talked a little bit about leadership impact and what that includes. What is the unique position of directors, how much more information we now know about directors, how much information now we need to understand about effectively executing directors duties. Legal framework, we talked about timing of the requirements, we talked about auditing requirements for the on instances where the company has to be audited. We separated audit from independent views, and we talked about the responsibility of an accountant in implementing the reporting standards within the within the business. There we also mentioned that SBPSA is not an entity that is helping the small businesses to report the information, but is an entity that is helping the entities to report on their financial statements information that can be backed up and information that can be traced. We talked about Section 29, and we learned that Section 29 is broken into two: the content requirements and the disclosure requirements. We talked about what is a director's responsibility statement, what is included there, and when you sign that statement, what are you saying? The same thing about the director's statements. We talked about the supporting documents requirements, where we said you must maintain adequate report documents for your business, have a plan to preserve or support or to preserve your supporting documents, and establish systems that will help you deal with supporting documents requirements, and select appropriate policies with the help of your accountant. Understanding what outsourcing information preparation exactly means. It does not mean this responsibility shifts away from you or becomes someone else's responsibilities. It is still your responsibility to do that. 4 quadrants of value leadership: vision setters, risk management, resource allocation, and culture builders are all responsibilities of a director there. Key director responsibilities are strategic planning and execution. We talked about compliance, and we talked also about financial control and reporting. So, what leadership roles in a small business we see? We define now some of the roles of the directors, some of the functions, and what implications those will relate to. Okay, do we now understand that directors have got multiple roles because they are occupying multiple seats? Okay, we talked about leadership as a competitive advantage in 4 quadrants. We talked about culture shaping, we talked about compliance excellence, we talked about performance optimization, and investor confidence. Those are the things that we talked about there. We had a checklist for a leadership investment. There we talked about skills assessment, we talked about benchmarking, we talked about training balance, and we talked about succession planning as well. Okay. So if we look on the key takeaways, we looked on two things. We looked on directors' responsibilities, and we also looked at leadership impact there, which brought us into the conclusion where we said building a business is a practical manifesto that must start today. Your path to business excellence involves three things: understanding your stakeholders, understanding your strategic pillars, and the practical implications that come with those. We talked about stakeholder ecosystems on our finalization, and we reminded you about who the shareholders and investors are and what information they are looking at. We talked about lenders or borrowers of capital. We talked about suppliers of goods or services. We talked about company employees and the labor unions. We talked about company and regulators. We talked about customer or buyers. We talked about competitors of the company. We talked about members of the company, a situation, community members of the company, where the situation where the company operates. We talked about in the last chapter, that is chapter 9, directors and management of the company. We talked about 5 strategic pillars for professionalization, where we talked about leadership, we talked about systems and standards, we talked about financial discipline, we talked about people development, and we talked about community and customer engagement. In the first pillar, we talked about professionalism as a system, we talked about financial discipline, we talked about employment deployment, we talked about compliance as a protection, we talked about customer and community partnerships. In our next step, we talked about your role on the financial review, what you must do for your cash flow planning, what you must do in relation to the policy, in relation to documentation of the company, and compliance check. Okay. And we ask yourself, what answers are you able to, what questions are you able to answer at the end of this cycle? Ladies and gentlemen, thank you so much. It has been a long cycle. Cycle 2 point, it is a long cycle, cycle 2, which covered 6 cycles in one cycle. And you realize that these cycles were in depth, and we covered a lot of information, which for us is now cracking this egg into what information can we get from it, and what is it now directors should be up into. Thank you so much for staying on Positive Straw, eager to learn and hoping to make a difference in the reporting within the small business environment. Ladies and gentlemen, my name is Holisha Kuzane, and I'm grateful that we've been together in this cycle from the beginning up until now. It has taken a lot of hours, and I'm happy. I hope that those hours will yield something positive within the environment and to your business success as well. Stay positive, and together we'll make a difference.